Hey, you have Patrick Findaro, co-founder at Vetted Biz. Excited to have on Brandon Ezra, who's the CEO and founder of Grand Welcome. Brandon, thanks for joining us today.
Right, thanks for the invite. Good to be here, Patrick.
So maybe you could start with just telling a little bit about how you got into the property management space and how you cemented your career in that area before deciding to franchise the concept.
Sure, yeah. So I got in as a kid. I've been doing this for over 20 years, and I liked snowboarding and fly fishing when I was young. And Mammoth Lakes ski resort, mountain resort, was fairly near me. I lived in LA, and I figured if I'm going to spend a lot of time up there, I got to make some money. And vacation rental management's one way to do it. That's how it got started.
So is this like right out of high school, college? This is all you've done, or did you have something else that you were doing and you were having this on the side?
Yeah, so I guess I got into this. Shoot, let me think. Wow, 2003, four. So yeah, I mean, I didn't have a whole lot of career before this, and I just did stuff. I finished up some school, and I just jumped into miscellaneous jobs and random things and a bit of traveling, like a lot of young people do, and I fell into it.
And did you ever work for like a larger property management group, or were you always an entrepreneur?
No, I was stubborn enough to not work for anybody and be taught anything,
I feel like
whether that
I've
was
seen
good
this
or
with
bad.
South African entrepreneurs, and there's some super successful ones, just going
Yeah,
like Elon Musk, obviously wealthiest guy in the world.
that's
And
a
I
good
don't think
example.
he ever worked for anyone out of UPenn undergrad. And there's a lot of South Africans that have blazed their trail in the US. And I don't know, is it like a very entrepreneurial society back home?
Yeah, it is. I mean, there's not a whole lot of big corporate stuff that you want to work your way up. It's you really have to have your own business and figure it out yourself. I mean, that's the environment. It's also a very nurturing environment. It's a great place to grow up. Obviously, apartheid was not a good thing, but certainly the British instilled an incredible scholastic system, and so the education there was off the charts. Like a public school there was equivalent to, like high school and middle school public was equivalent to a private school in the US. And so the education was excellent. It was a great environment to nurture business people, and that seems to be what happened.
And the experience that you had in property management, what has like led you to continue on that path and not go into some parallel like property development or working at one of the resorts and following
Yeah.
another track? What's kept your head down and focusing on vacation rental property management?
Yeah, I looked at all those options, and I've dabbled over the years. But vacation management, it's a massive industry, as we all know. Recently, it's grown up quite a lot with the advent of Airbnb and Verbo and things like that. And there's just a lot of opportunity, right? It's predominantly still mom and pop operated. 90% of it, 95%
Hmm.
is relatively small operators. Um, and I just like the little towns that they're all in. Quite frankly, I like the actual geography that's attached to this industry. I like the towns. I like the people. I like the communities. So my day-to-day work, obviously, like everyone, work can be tough, but for the most part, I'm working with really great people. So it's been really awesome.
So tell me about these mom and pops. Is this like, are they managing 5 rentals, 10 rentals, 15 rentals? Like what do you tend to see when Grand Welcome opens up in a set community and there's mom and pops offering vacation rental management?
Yeah, mom and pops are generally south of 50 properties under management, and a huge portion of the industry is south of 20. Just little teeny companies, people managing just a few properties. But for Grand Welcome, we would expect most of our franchisees to be anywhere from the 50 to 100 range,
That's
roughly,
significant
ultimately.
because, if you're managing 15 vacation rental properties in Orlando, you're doing maybe top line revenue 150, 200K. So everyone can do the math. If you have 50, 100 properties under management, that's a serious business with nice top line
Well,
revenue.
Well, on average, there's 65,000 revenue per unit in the industry on average. So if you're doing, let's say 20 properties, you're at 1.3 million in revenue. It's not bad with a pretty good margin. And if you're running it as a mom and like just an owner operated franchise, you're making money on 20. It's pretty good, But there are inflection points, right? So you start getting to that 20 to 30 range, and now you really got to bring in like someone to help you. So now there's payroll, and then you grow to that next stage and you make up for the payroll and you get to that next level of profit. And the next sort of inflection point's about 50 to 60. And then the next one's about 110 to 120 properties under management. But all these different points require additional investment to get to the next level.
So I
So that's
imagine
why,
margin goes down, you reinvest the profits, you hire up, and then you can get to the next tranche.
yep, that's it.
And
So that's why a lot of people will stop at that 25 mark because they know, hey, at 25, it can just be me. I make my money and I'm happy. Those who get more ambitious want to get to the 50, 60, and then so on and so forth. And obviously, in some territories, don't justify a lot of growth. Little teeny locations just justify 20, 30 properties under management, and some other locations like Orlando is a good example that justifies, I guess I would be disappointed if that location wasn't 200 to 300 properties eventually. Should be.
yeah, and I mean in Orlando in particular, there's a lot of just single family homes that they need a lot of work. So I imagine there's ancillary services that you can keep on offering and that you're getting compensated on if you're managing the property, whether it's the outsourcing of the pool guy, pest control, all that.
Yeah, there's stuff you can make a margin on, like just general maintenance stuff. I'm a strong believer in being hyper focused. So if you're going to manage properties, just manage properties. Just get more of
Okay.
them. That's how you should make more money. But in some cases, you may eventually max out in an area, hit a ceiling, right? And in that case, okay, you have more now. You have more time on your hands, and you want to make a higher margin. And then then get into some of the ancillary type services, and services not just to the owner but to the guest. Every location has stuff that they can make a margin on. So my advice is stay really, really focused until you've hit a ceiling, and at that point, look for other ways.
That's well said. And for your franchisees of Grand Welcome, are you more focused on the high end niche? Like what's the average rate per night or per week or whatever metric you track for the
We're
franchisees in your
we're down the
system?
middle. Like our average, like the average for the industry is about 65,000 a year for a property. We're slightly below that. I think we're like 62.5, and that's just because we've got one or two franchisees that are doing extremely well. They just have a lower ADR, but their numbers are through the roof. So that's a good problem to have. But we're about down the middle right now across the board.
And what's it look like? Like what type of support do you provide a Grand Welcome franchisee from going 0 to 1 or 0 to 20 units under management?
Oh, a ton of support. I mean, just really everything: training, technology. We can even help with sales, with signing on properties. We help with marketing. We get the data for the properties and emails and phone numbers and all the stuff you need to solicit the owners. We produce the revenue once the property's onboarded. When you wake up in the morning and your property manager system's full of reservations, that's us. We also help with strategic advice as you start hitting those inflection points. Like, what does the next level look like? Well, we can help because we've done that a number of times, and so it's quite extensive. We have 24-hour guest services as well, so it's a lot of support. We want to help the franchisees do what this thing's been built to do, which is just sign up a lot of properties and just produce a lot of revenue.
What are some common traits like the top performing franchisees exhibit?
Just getting their hands dirty, putting a lot of work out the gate. Super
What are we
important.
talking? 40, 50, 60 hour weeks for the first 18 months, 24 months?
Yeah, probably the first 12 months is going to be a toughest go. And yeah, you're definitely going to put in more than a work week, right? It's your business. Like if you're
Yeah.
opening your own business, not a franchise, you're not putting in 40 hours a week. I mean, I would just say to you, just stick to a job, right? Because it requires more than that in general. Like you're going to have to work really, really hard to build a great business. There's no shortcuts. But so that's what they have in common: really hardworking, really focused. They're collaborative. If you want to buy a franchise, you need to collaborate. Like you're not a single standing shop. You got to work with us. There's going to be problems. We're going to make mistakes. You're going to make mistakes. It's a partnership, and you got to be the kind of person that wants to work it through. But yeah, if you have that going for you, I think that franchising is a good thing, and we're probably a reasonable option.
Looking at your financials in the last FDD, I mean, you have multiple corporate locations. You like to surf, snowboard like me. Why keep growing? Like you had made a pretty nice lifestyle for yourself, your employees, like everyone in the Grand Welcome ecosystem. Why then franchise and add a lot
Yeah.
more work for you and grow that way?
Well, that was totally a personal decision. not a financial one. And so I've always, I'm a young guy. I'm just like got into my 40s and a lot of years ahead of me. So I'm a strong believer in just offering a lot of value
Yeah.
as much as possible, while you're here, right? So on a personal level, I know I can help hundreds, if not thousands, of families create wealth and businesses and just, really add value to their communities. So that's the primary reason that I'm deciding to franchise. But yeah, I totally just could have stuck to corporate, open more locations, or not even. I mean, numbers are good and life is great. But, that would have been a little unrewarding long term. If I sit back in my rocking chair one day and look back and said, wow, I made a lot of money with some corporate locations and that was my contribution. It's not a bad thing, but it's not as satisfying as what I'm doing now.
That's well said. Yeah, I mean, the value you create, I mean, that's more fulfilling than a lot of these other activities that I also enjoy too, but, they're the long-term value that you can give to franchisees, employees, etcetera, I think transcends a lot of other things that you can do with your time.
Yeah, I mean, money's not fulfilling. It's a thing, right? Sits in a bank, and like we've all been there, where you've like strived for something material, and when you got it, like 2 days later, you're like, oh well, that's it. That's boring, and like it just gets old quickly. So yeah, you want to really be super fulfilled, just like help a lot of people, and in turn, you'll do well, right? Like that's the way the world's built. Like add value, and value comes back to you, but you got to add the value first. And so for me, helping all these vacation communities keep the revenue in their communities and not go out to the large corporations is good. I like that. And the people themselves, the franchisees, creating a lot of personal wealth. That's great as well. I like both of those.
So we've looked pretty extensively at the existing property management franchises, and very few are hyper focused on vacation rental. A
Yeah.
lot of them do anything. It's managing homeowner associations, commercial, residential, long term. If
Yep.
you want to dabble in vacation rental, you can do that.
Yep.
Why have you decided just to keep going with vacation rental and not maybe have your franchisees also do long term residential or some of these other facets to property management?
Each one of those segments of the management world are really complicated. Vacation rentals being the most complicated, I think by far.
Highest margin too.
Highest margin. And you've got to be very focused. When you get up in the morning, if my team is focused on one thing, which is to help you get vacation properties and produce a lot of revenue for you and the owners, that's a good thing, right? You don't have any commingling of thoughts, you don't have any conflicts. It's all really just flows quite nicely. And business in itself is hard enough. So why complicate your business with multiple endeavors as opposed to just sticking to one and doing it really, really well? And it's not like we're ever going to max out on vacation rentals. As big as we ever get, let's say eventually we get to 5,000 locations worldwide and all the properties under management. It's still a very, very small percentage of what is out there to be managed, right?
I mean, real estate as an asset class, someone told me it's like 2 times larger than like all the publicly traded stocks. So I
Yeah.
mean, it's just there's so much out there to be had.
And once again, it also for me is so the focus part's huge, but it's also I'm personally interested in people doing well and seeing them continue to do well. And so um, I know these vacation businesses can last decades and bring almost an annuity to your family and your community for decades. So, the first company I ever bought was in Mammoth Lakes, and I bought it from a guy named Dave Buckman. And he'd ran that business for 37 years, making money every year. And that was 15 years ago. So it's like a 52-year-old business today, and it still makes money today. Like we've never not made money
That's
ever.
awesome.
And so, and that's not a huge company, right? It's like 100 properties in little old Mammoth Lake. It meets the average, like 65K per property, so nothing special. And so if you just stay focused on one industry and build one thing really well, you can get decades of value out of it. And so to me, that's just enough to just say, just do one thing.
It's like Chick-fil-A and the Cathy family. They're worth 14 billion and they just focus on chicken and they
Just
just
make chicken
sell a ton of
sandwiches, right?
chicken.
I've got a guy that I know is, one of the head of operations for In-N-Out Burger.
Oh, wow.
And if you've been to In-N-Out Burger, they are not diversified. It's a burger. And
Yes.
the bigger version, like the different version, is one extra patty. That's it, right? And there's fries. I mean, that's their menu essentially. But who doesn't like an In-N-Out burger?
Sadly, I still haven't been to one. All my trips to California, it's like the wait's like 45 minutes and haven't had the time to like wait in the drive-through lane.
Well, there's one right around the corner for me. So if you ever swing by, I'll take you for one. But
For
it's a great
sure.
burger. It's hyper focused. They got one thing right. And then once again, vacationals is very complicated. So we take most of the complication on the backside of the business. So we have quite an extensive staff right now. So we've got about 50 locations total. It should be about 70 by the end of the year and something like that. And we have way more staff than franchisees. And so we're staffed with some of the very best people in the industry. And so, and still, it's not like we wake up every day and it's easy. It takes a lot of hard work. So just like, for me, it's like be super focused and, the rest should take care of itself.
Diving back on the numbers, so like break it down for me a bit. I don't know if I'm doing the math right. So say like 62,000, 365 days a year. Obviously there's some days that aren't booked, but you calculate it like hotels ADR. So that's
Yeah.
like 200 bucks a night ADR.
Well, it depends on the occupancy of the area.
Yeah.
So the average occupancy in the industry is, just sort of mid 50s. So that's what, about 180 days. I don't have my calculator in front of me, but 180 divided into around 65,000 is the average, and that's the average ADR.
So
Right.
then that's essentially what you're getting renting out the property. And if you own the property, that's what you're getting. But if you're managing someone else's property, what's the split with the grand welcome franchisee and with the owner of the property?
Grand Welcome Friend, they can set whatever management fee they want, and most of them are somewhere between 20 to 25% on average. Sometimes a little bit lower, sometimes a little bit higher, but that's roughly the range.
Understood. So that's clear now. So saying you're say per home roughly 10K, and the idea is you're building up to $1 million business home by home by home that you bring on to your grand welcome platform.
Yeah, that's it. Just incrementally bring the homes on. The homes generally have a very long shelf life, very sticky. So most homes come on, they'll stay on for 4, 5, 6 years on your program, some longer. I got some homes on my program that are 20 plus years from companies that have acquired. So some people stick around for a long time, but on average, it's quite a long stay. Especially in a stable economy, which by stable I mean not a post-COVID economy where real estate prices go through the roof and then there's turnover. So for the most part, yeah, people just stick around and help build up your business.
And during your experience with the corporate locations and even with the franchisees, did you ever have like an acquisition in organic growth, or has it always been organic growth for
I've,
years of
I've
time?
I purchased a number of companies. So when I was looking to do the corporate thing, I bought like 15 companies, little companies, and I just stitched them all together and grew. And then I took a look at my balance sheet and I took a look at the damage. And it's like, you know what? The only reason someone's going to be buying a lot of companies, unless it's a very strategic move, is because there's a problem. And I didn't have a problem. I mean, my balance sheet's clean. Like we got basically no debt. We P&L's good. So I was like, why even deal with this? And it was a little unsatisfying. And I'd looked at franchising many years before that, and I couldn't do it because Airbnb and Verbo really didn't exist. Well, Airbnb certainly didn't, and they were the key to what we're doing. Because if you have, say, a franchisee that signs up in Spain and they sign on a few properties. Back in the old days, well, never mind Spain, how about Aspen? Keep it local. And they sign on 20 properties in Aspen. Back in those days, the local Aspen managers controlled the Google space.
Huh.
So what are you going to do with your 20 properties? Like, no one's going to find you. There's no revenue. So good luck
You
to
got to
you.
go
It's
through
done.
them.
Yep, that's it. So as soon as the OTAs, the channel managers, Airbnb and Verbo and Booking.com and all these guys took over the space, and now they're now dominated. Obviously,
Yeah.
it's easy. So I could sign up a property anywhere, probably in the world, and put it online and potentially have a reservation the same day. So that was like a huge turning point for me. So looked at franchising 2010, 11, didn't really work. Looked at it about just short of a decade later, looked great, and here we go.
So you've had some acquisitions yourself, buying out basically mom and pop and consolidating the contracts under management. Is
Sure.
that something you advise for prospective franchisees and entering Grand Welcome, or even the current franchisees after they've been up and open for a few years?
Yeah, so that's the key point. Up and open for a few years. Know your market, know your margins, know your attrition rate. Once you buy these companies, not everyone's going to stick around. Make sure you cut a good deal. So as long as all the numbers stack up, but yeah, it's a nice way to supplement your growth. Sure, it helps, right? But you could put the same amount of dollars into marketing and just plain old hard work and probably get those properties anyway. But it doesn't hurt. Like if you have the additional capital and the numbers stack up and you know your market well enough, it can help. It can be a good synergy, but it should be done with a lot of care.
And for Grand Welcome, for someone that's going to start with zero properties, like what should they have, including working capital? And they obviously have to have other funds to live off of, especially if their spouse isn't also earning.
Yeah,
But what's like a realistic number so where it's like you should have more or less this amount or this range to
yeah.
open
Well,
up the business
you know,
with
we
working capital?
yeah we cap at about 160K for all in investment right now. And that should get you through to cash flow positive, and then that's for our biggest areas. So that's like the tier four. We have a tiered system of area sizes, 1 through 4. Obviously, a tier one is a lot less cash, right? A tier one costs $15,000 to buy the territory. It's a very small territory. Tier four is 105,000, and everywhere in between, right? The two
How
different
do you
tiers.
measure the territories?
By the size of estimated revenue, so we've got metrics on the number of properties and their ADRs and the occupancy, and so we get a pretty good idea of revenue. We'll always err on the side of caution. If a territory is a tier two, but it just barely is a tier two, we'll just pop it down to a tier one. Like we always want to be fair, but we use a tiered system just to make sure it's affordable for any community to start up.
I like it. And then do they have like right of first refusal? Like say someone's like tough on cash and they want to get their feet wet with Grand Welcome and they're super hard worker, but they just don't have enough cash for a T4. If it's going well, can they then upgrade? Like how does that work out?
Well, it's first come, first serve. So you can't really lock in a future area at all, really. But if someone wants to buy it and you're adjacent or we know you're interested in it, we will talk to you about it and say, like, look, this
Cool.
this is happening. If you want
Yeah.
it, here it is. You can buy it, and obviously buy it upon our approval, right? Like territories are really valuable, and we want to make sure, first of all, that our franchisees can afford it. They're not overextending themselves. There's nothing worse than a successful business, drowning in expansion. Nothing sadder than
You
that.
see a lot of that in franchising where people are boasting about like 300 territories sold, but like then you look online and there's only like 20 locations open.
Yeah, and also people selling 300 territories and just not having the staff to back it up or validating the business strategy. I mean, I just got out of a 3-day deep dive with my executive team on the model and the strategy and changes we need to make. And it's an ongoing thing because industries adjust, pricing adjusts. You got to stay with it. So expanding too quick is really frivolous. For any business that can cause a lot of trouble. You got to be very cautious about what you do, and certainly make sure you're adequately capitalized. Otherwise, you can have some big problems.
And what are you seeing in terms of like resale values? So, the average franchisee holds onto their business for 7 years. Hopefully for Grand Welcome, it's much longer than that. But realistically, someone invests 160K, they have 50 doors. Like what's the type of value for what valuations are you seeing for that type of business
Well,
in
we
property
haven't
management?
sold any yet because, as you know, we're an emerging franchise, a couple years old. The industry, so the vacation rental industry, I can tell you about that with a lot of detail. So generally, um, companies that are less than say 500,000 of EBITDA will sell for around anywhere from 4 to 5x, 4 to 5 times profit. So if they're producing say 500K in profit, they'll sell for about 2 to 2.5 million, roughly, right? And it goes up from there. So if you say north of 1 million of profit, I know companies in the vacation industry that have sold for 7 to 10x. So all of a sudden you're 1.5 million, and you're selling for $8 to $10 million potentially. But I don't have any experience yet of a resale within my system. I'm not sure if the resale values will be higher or lower. Potentially higher because it's attached to a system, maybe more stability for the buyer. maybe lower because perhaps the people paying the big bucks want the company as an add-on for a thing they have.
Yeah. I
But
could see it work like either way where you have like that financial buyer where the valuation goes up, and then you have like the strategic buyer where it's like the resort that wants to buy it, and
yeah,
they
yeah,
want their own brand.
yeah. But it's probably in that range. I got to think it's got to be somewhat relevant to what's happening to freestanding managers, right? Vacation managers.
And what margins are you seeing in the vacation rental property management space?
Margins are pretty good. I mean, out of every dollar that gets booked by a guest, about 35% on average, maybe a bit higher, should land up as usable dollars for the franchisee. It's pretty decent.
Solid.
So margins are pretty good. I built the franchise for our franchisees to be cash flow neutral or even positive within the first year. That was always my plan. So initially, we were charging 6% of total revenue as our royalty, and we now dropped it down to 8% of net revenue, which was
Nice.
at a 50% reduction. I did that a few months into this. And the reason I did it was obviously clearly not to make more money for myself because I'm getting half as much, but it was to get the franchisees more profitable quicker. And so
Yeah, and
that's,
that's going to be more interests are aligned where you could there's different ways that like the franchisor can manipulate like if it's off gross or off like certain metrics. Like I was looking
yeah,
at Kumon franchise and their effective royalty rate is like 20 to 30% based on like how many subjects are sold, but the
yeah.
FDD is just so damn confusing and like it's just not clear at all like how much money at the end of the day the franchisee is going to keep and or
Ours
how they
is
split it.
as simple as pie. I mean, it's crystal clear. There is no
Yeah.
confusion. I'm a strong believer in simplicity and not duping people because eventually the hens come home to roost at some point, and so we make a margin on the dollars that you actually have to use to run your business, right? And it's a pretty reasonable margin, and that's it. We have a technology fee simply based on the number of units you have. So if you're super teeny tiny, it's a teeny tiny little number, right? If you're really big, it's obviously costs more. Technology is expensive, so it's really scalable. Like the whole, one of our major focuses for the business is to support vacation communities worldwide, any of them, small or big. And that's why we started out with a very small tier one, which is a tiny little area. Most people would drive by it and they wouldn't even know vacation rentals are happening necessarily, all the way up to the biggest areas in the country. And that's why we scaled our royalties accordingly and our technology fees. So you can be a tiny operator in a tiny town and you can have all the horsepower of what we have to offer, which is substantial, pay a fraction of the price of what it would usually cost you. Just a teeny, teeny little amount, really, for what we're offering. But get the very best for what you're currently managing. And so that was the design from day one. And it seems to be working quite well.
And how's it been with the whole work from home? We work with a group, Bridge Internet. I just interviewed their founder, and so many people are moving to rural areas, or at least spending a lot more
Yeah,
time in rural areas.
yeah.
Curious to hear the impact for your business.
It's great. I mean, I'd never go back to an office. There's no point. I mean, I got key leadership of mine all over the country. I mean, there is no office we can go to anymore. Like the ship has sailed. Like it's done. And it's great. I mean, the one thing COVID did for me was just show me you just don't need people to go to an office. If you've got great people, can work from anywhere. And then all of a sudden, like your hiring geography becomes anywhere in the US, which is amazing. So we've got super amount of talent just all over the country. We do seem to have a lot of people in Austin now.
Okay.
Just the way it's happened. Southern
Well, I'm sure a
California,
lot of the
obviously,
tech workers now,
yeah,
on the tech
exactly.
employees.
Yeah. But it's for us, it's a moot point. Like we are over the office type thing. We do get together for meetings from time to time, but all good.
Have you ever considered, out of curiosity, hiring abroad? Like we have a pretty big team in Argentina, and we get together every 6 months, and we found that's just been a great accelerator for our business, given the education level there, and that it's a fraction of the cost as American workers.
Yeah, I think it's an option. I think, but as we start going to other countries and expanding, I think then hiring people in those countries becomes more feasible. The one thing I didn't want to do out the gate was sacrifice quality in any way, and I'm not saying it would sacrifice quality, but I know if everyone's in the US, time zones, language, culture is in alignment, the probability of me being successful for my franchisees, it goes up a lot. So I'm not, I wouldn't call it cost cutting, but I certainly want to maintain quality. And in the future, there might be some stuff we go abroad with. And I think, I think we do have a few people we work with abroad. But right now, it's all in the US and
Nice.
all people that are plugged into our culture and they sort of understand the market a little bit more intimately.
Have you had many inquiries for people wanting to open up Grand Welcome in their home country? We have a
Yeah,
lot of
yeah, we
people
have.
listening on our podcast, YouTube channel from all over the world.
Yeah, yeah, no, we have. We've had people from all over the world, and we're most probably going to register now in Canada and Mexico, just get that going, and we'll start. I think next year maybe doing our first couple, international, but kind of local. Canada and Mexico, I consider somewhat local. Will be in the cards, but if we do have some fantastic people in other countries, we are willing to consider opening there next year. And I'd say 24 for us will probably be the big international year where we open up, another maybe 4 or 5 countries, and we put a lot of time and effort into that.
That makes sense. Yeah, you have the whole US market where, as you said, your whole team's aligned, cultural, everything's, on
Yep.
top to dominate the US market. So it makes sense
Yep, we
focusing
definitely
there
want
for
to.
next year.
Yeah, want to stay away from dilution. Like the whole focus thing, it's not only what you do; it's how you do it. And as soon as you
Executing.
start going international and you start doing these things, it's sexy on the outset, but when the rubber hits the road, it does dilute your team and dilute focus to some degree.
Yeah,
So you
and
really
you
got
have to
to do
do
it.
it right. I mean, I imagine like you choose the wrong market, it doesn't work out. It can just be a huge drain of your time. We saw that with Dunkin' Donuts. I think they just opened up 7 locations in China, pulled out. I can imagine the executive team, how much time they spent on that, like
Yep,
go to market strategy, relationships with franchisees. So
yep.
sounds like you're doing it right.
You got to
Going
just.
back to earlier in our conversation, so you give a territory like what percent of the addressable market, what's their target? Like, are they hitting up 5%, 10%, 20%? Like when you give a certain T1 or T4 territory, how much do they need to capture that
Well,
for it to make sense?
yeah, we do have a minimum that we require, and it's pretty low. It's like 2-3%. Like
2 or
we're not.
3%.
Yeah, we're
Okay.
not looking at huge numbers, right? Like we hope they get to 5-10% because that's a home run for them. Like they will do extremely well, but they don't have to. It's not required. Like
And I know you have like revenue figures, but for me to better understand, like say you have some ski resort, Snowshoe Mountain, West Virginia, where I used to go skiing as a kid. Maybe there's like 500 doors,
yeah.
or say there's 1,000 doors in Snowshoe Mountain, and so with those 1,000 doors, they should be capturing at least 20, at least 30. But if they get to 100 of those doors, it's a home run.
Well, in a place that's more isolated, such as that location, I mean, they could get to 100, 150 properties. So more isolated locations have less pressure from the big corporations out there. And so the local mom and pop operators usually control those markets pretty well. So no, I'd say a thousand doors, you could get to a good 150 properties comfortably over time. I think that the 20 to 30 properties are the areas that have like 200 to 300 properties. It's a really little tiny area, and
Okay.
you're going to sign up 20 to 30 pretty easily just by being there. $1,000 is pretty good. You can do
We
some real
talked about
damage
the
with it.
mom and pop. Who are these big players? You don't have to go name by name, but like what are these
There
organizations?
aren't many I can name them. I mean, there's Vacasa, which is the big public giant right now. Vacation Rental Pros. There was Turnkey, and there's some regional guys that do take up some bandwidth in the industry. But Vacasa is the big guy out there. And if they're in your territory, it's not a whole lot to worry about because the quality of service is super low. And so, for the most
Well,
part,
you
if
don't
they're
you don't
there,
have the owner that has skin in the game.
yeah, they were really good in the early days, and they just basically became a financial machine. And so their stock prices are just plummeted from I think like 12 to 2 or something like that.
Oh
And
wow. So
it's
yeah,
yeah,
the
they're
corporate
definitely not a
folks are going to be more focused on like refinancing their debt and other corporate
yeah,
strategies rather than like delivering
yeah,
a great service.
yeah. I mean, if the big guys are there, like I just say, don't worry about it. Like that's perfect inventory for you just to pick off.
It shows that there's been a product market fit and that people don't want to just manage the property themselves and they want to have another firm manage properties.
Yep, that's it. No question. Well, that's why local ownership was such a big deal with franchising. Why I think it's really the only way to create a large national brand, or international even preferably, is local ownership is what vacation rentals require. I mean, this is not the hotel industry. It's individual owners, it's building relationships, it's being connected to the community. And, a local ownership is the way to do it.
Well, you mentioned hotels, like compared to hotels, it's super asset light. Like I did a video, got released. This is November 17th. Our conversation will be released in December. But Marriott Hotel, it's over 80 million to open one. And maybe
Yeah.
as an owner, you're earning like 2-3 mil.
Yep.
Like
Yep.
how does it make sense? Like
Yeah.
the
Yeah.
hotel space for a franchisee, it doesn't add up.
It's so different. I mean, the only commonality is it's a short-term stay. Like, other than that, that the two are not connected. And trying to do the big hotel or the big corporate thing with vacation rentals has never really worked out. Resort Quest tried it many years ago. I'm friends with many of the founders of that company and CEOs, and it was a disaster that eventually went from 30,000 properties down to like 12,000, which obviously is a catastrophe. And Wyndham eventually bought them, and Vacasa, that big company, eventually now bought Wyndham. So it just doesn't work. There's certain things in this world that no matter how you try and maneuver them are not going to become the thing you want. And vacation rentals is a personalized industry, and it's never going to change, in my opinion.
Yeah, and there's a reason why you keep just laser focusing on that. The opportunity is huge, margins, all these things that we've talked about today.
Yeah, that's a good point.
What territories are you most excited to open up in? Say someone's super hungry, they have 200K capital, they want to grind it to get that, to
Oh
get to 20
man,
doors, get to 30 properties. Where would you say,
there's
hey,
the
open up
list.
here? You can live anywhere in the US, like, but do this place or these
The
few
list is
areas.
so long. I mean,
Yeah.
but like on average, ADRs and revenues definitely higher along the coastline. Anywhere along the coastline, it's higher. Ski locations, mountain locations can be very good, but the coastline is definitely huge.
One of the things are regulations, like local regulations. Where I live in Miami Beach, it's very strict on short-term rentals. Is that something that you help navigate from the on-site before someone commits to a certain territory, and then also on an ongoing basis? How do you provide support to the
Yeah,
franchisee?
sure. Going into the program, we generally have got some visibility on state regulation, right? What is required to do this business?
Sure.
But when it gets down to the actual local regulation, we can be helpful, but we really leave it up to the franchisees to figure it out because each area really has very nuanced regulations, right? And it can be very in depth. Sometimes it's easy. It's just like, look, there's no real regulation. Just good luck to you. Go and manage properties. In some cases, it's not that. So
Like
we would,
Miami Beach is like block by block, very
yeah,
very complicated. And then I imagine there are certain states where it's just like you kind of do whatever you want as long
yeah.
as you get the license.
Miami's definitely more complicated. I mean, we do have a franchisee there who carved out a nice territory, and
Oh,
heck, he
nice.
just started, and the properties are coming on. So,
Rates are crazy. I'd imagine it'd be more like 100,000 a year down
yeah,
here.
yeah, yeah. Hawaii on average is around 100,000, but more even about 110,000 a year
Oh, wow.
per property. But yeah, so we state regulation. We're pretty savvy with that. Local regulation, certainly franchisees' responsibility, but we're totally here to help as much as we can.
Well, Brandon, I've enjoyed this conversation. I've learned a lot. I'm sure a lot of people listening have as well, or if they're watching on YouTube. Any closing thoughts for someone wanting to get into franchising or into property management?
Yeah, I think the best way to hedge your bets, certainly against economy and retirement, is to take control of your destiny, and franchising is a great way to do it. You piggyback off a lot of competency and strength of people who should know what they're doing, and you can build it up with a pretty high probability of success. So I think for those people, it's a good option, and yeah, definitely a phenomenal industry.
Well, Brandon, we'll be sure to put the contact information of your website. Is there a particular call to action you'd like to leave today for people that are interested in Grand Welcome?
Yeah, sure. I mean, just go to Grand Welcome Franchising or even grandwelcome.com and just reach out to us. You'll get a response same day, and we're happy to show you what we do.
Perfect. Really appreciate having you on today.
Thanks a lot, Patrick. Appreciate your time. Talk to you soon.
Thanks.